on that particular acquisition. Thanks for that update, Nisha. Should focus then to the fundamentals of the market, and joining us live on Street View at lunch today is Ritu Arora, CIO Canada, HSBC, OBC Life Insurance. She joins in live from New Delhi. Ritu, thanks for chatting with us as always. What's your sense on the outlook as far as the market is concerned in the near term? Do you think the weakness is here to stay, given the way the currency has been depreciating?
Thanks for having me. Some of the experts before me spoke on technical experts that they do not expect market to go anywhere this week. Personally, I would think market will be range bound not only this week but for many weeks to come, because the tug of war is pretty much at this point in a bearish territory, but the valuations are attractive. So yes, currency is a big impact on the market. Current account deficit does not bluster the confidence in any way. IIP numbers have been weak, interest rates have been volatile, and we do not see an easing coming. And in that environment where there's not much hope and excitement even from corporate results, I would expect that markets will remain in a range. The valuations on many sectors are still attractive, and hence there will be a tug of war wherein some correction and then there'll be an uptick again. But a range is what I expect the markets to maintain.
Ritu, what's the expectation from the banking pack, especially the private banking lot? We are awaiting earnings from IndusInd Bank right now, and they're expected to be good. Do you think the asset quality concerns, at least for the private banks, is going to ease out come this quarter?
I'm personally more bullish on private sector banks vis-a-vis public sector banks. Public sector banks are suffering a lot of larger issues compared to private sector banks. I would not see a big easing in private sector banks as far as asset quality concerns are concerned, but they aren't very big concerns anyway. I expect a good earnings growth there as well. A little impact on fee income, but otherwise NII should be maintained. And hence I'm more bullish on private sector bank results this quarter than I am on other sectors.
What about the IT sector, Ritu? Fundamentally, what's your call on the IT sector? Obviously, everyone's looking out for the Infosys earnings this Friday, but what are you expecting from the IT sector, and what kind of earnings also are you expecting from the big boys?
Of course, depreciating currency is a definite positive for IT sector. Having said that, the immigration bill hangs heavy on this sector, and the outcome of what is finally drafted and approved in that will impact the long-term profitability, earnings, revenue of this sector. Being more specific on recent quarter, I would expect a flattish quarter for the big IT companies. There may not be too much of a margin and earnings impact because a lot of the cost increases, wage increases, etc. hopefully will be absorbed by the currency depreciation. So I'd expect a flattish result with a little negative pressure still showing, but relatively, hence I remain positive on IT sector from a medium to long term view, and I continue to be overweight here.
What about pharma then, Ritu? Will it continue to find favor with the market?
In the range-bound volatile market that we've been discussing, there are very few pockets and sectors which have been delivering earnings growth. Pharma clearly is one of them. Though as a sector trading at reasonably high valuations, almost 25 times FY14. So valuations are high, but then I would think that the stocks will perform in line with the earnings growth, and hence there's more visibility on the growth there than in other sectors. So I would continue to like pharma and continue my weight there.
Would you be negative in the auto sector in general, because there are just way too many headwinds? Demand hasn't picked up. There are some serious labor issues as well, and of course it's unlikely that we will see aggressive rate cuts this fiscal as well. So nothing seems to be going right for the auto sector, with the exception of possibly a good monsoon, but even that only helps a segment of the auto industry.
Yes, you've summarized it pretty well for me. I agree with your analysis that auto sector has more headwinds at this point in time. And I would be wary. I would not exit it in a hurry if I have weights, but I would be wary of adding weights, and I would look at it with caution and maybe even cash out if the going continues to be as tough.
Ritu, finally, before we let you go, what are you expecting from the central bank in July? Because the expectation now is getting built that it's unlikely that they will cut interest rates given the way the rupee is depreciated, and there isn't too much of good news on the inflation front as well. Would you agree that it's likely to be a pause on interest rates for now?
I agree there would be a pause. There is really no case for a rate cut in this environment. Our current account balances, as you know, are depleting. The reserves are only about $286 billion now, so intervention possibilities are few. Inflation hasn't eased off as much as one would have expected, and growth, though it's come off, currency becomes a bigger concern for the country at this point in time. So I would think this policy review will be a pass. What would be looked at will be the stance that the RBI governor takes and the language that he adopts. I wouldn't be surprised even if that turns a little hawkish.
Ritu, good chatting with you. Appreciate you taking the time out and joining us this afternoon. That's the view coming in from Ritu Arora. But let's also tell you how the global markets are panning out. It's been a quiet start to Europe this afternoon. Let's see what the European markets are up to right now. They will just come up for you on your screens. And let's also bring on board Christian Schulz, senior economist at Berenberg.